I wish you all welcome to this track, our first talk in the peer-to-peer track at FSCONS 2015. And we're going to listen to Patrice Riemens, and I'll let him introduce himself. He's going to talk about the pitfalls of Bitcoin and the potential of blockchain technologies.
Right. Yeah. Okay, so I'm Patrice, I'm from Amsterdam, and I'm mainly known as an internet activist, and I'm going to indeed talk around about Bitcoin and also a bit about the blockchain. But I thought first, before I say anything, let's get this guy talking. This is from a Dutch television program, 1 week old, very recent documentary.
So we're standing here in my living room in Tokyo, Japan. I'm showing you just how amazing Bitcoin is by sending 100 euros worth of Bitcoin as of today's value through my TV, onto the camera, onto the TV in the Netherlands, and anybody with their Bitcoin wallet ready that scans what they're going to see on the screen in a moment will be able to claim the 100 euros worth of Bitcoins. And there's nothing that anybody can do to stop it or to freeze your account or block it or control it in any way. So on the TV here, we have a Bitcoin address that I just generated. And I have my phone here. I'm going to scan the QR code for the Bitcoin address on the TV. Now I have it. I'm going to send 100 euros worth of Bitcoins to that address. So we'll hit send. And anybody can monitor on blockchain.info the balance of this address. There it is. 100 euros worth of Bitcoins just arrived at this address. So total received 100 euros. Final balance 100 euros. Just like that. So on this next screen you're about to see, anybody with their Bitcoin wallet that scans the private key that corresponds with that address will be able to claim that money just by scanning the code that you're about to see on your television. So if you want to take a look, here it comes, 100 euros ready for anyone to claim. All you have to do is scan this one right here. And,
it has been blanked 2 days ago.
Bitcoins as of today. By the time you scan it, it might be worth even more. So there it is for anyone ready to claim with their Bitcoin wallet. Okay, Holland, now you've just seen the power of Bitcoin. I sent 100 euros worth of Bitcoin from here in Tokyo directly to you guys through this camera, through the network, through the TV, right into your home. If I had tried to do that, send you the money with a traditional bank, it would have taken several days and probably cost 30 euros. I just did it right now with Bitcoin instantly, basically for free, and didn't have to ask anybody for permission. I didn't need a bank, I didn't need a government, I didn't need anybody. I just needed myself and you and our smartphones to do it. That's the power of Bitcoin.
We will have this guy, known as Bitcoin Jesus, look on my talk, and he is going to probably to disagree. Okay, the very first thing I have to say is that unlike him, I am not a coder. So I'm not going to say anything very technical about Bitcoin. I believe I basically understand what Bitcoin is about, but maybe these guys will say, oh my God, that's complete nonsense, but okay. What I'm going to talk about is basically the political economy that goes with and is entailed by Bitcoin. And I've tried to structure my talk in 3 parts. No, actually 4. The first is first things first, and will be a very short, succinct think about the money. What is money about, and what is the relationship in terms with Bitcoin. But it's basically about money, because very often one talks about Bitcoin, one talks about new forms of currency, alternative currencies, etc., and actually forget how money works in the everyday world for everyday people. The second thing will be about Bitcoin, about Bitcoin's monetary design. So how the design of Bitcoin is related to money, and how Bitcoin function or attempts or pretends to function as money. The third thing I will talk about, which might be the most important, is the political economy of Bitcoin. That means the social, economic, and political consequences of a Bitcoin kind of setup. Not necessarily Bitcoin, because now the general craze is to say that Bitcoin is going to exist, but it won't be Bitcoin. It's actually the why Bitcoin is not Bitcoin. It will be the next talk. By the way, it's written on the program that I will talk about the many potentials of blockchain technology. Actually, I won't do such a thing because I don't think blockchain has the potential it is described to have. But okay, we'll say something about the blockchain. So, having talked about the political economy of Bitcoin, to call it like that, you must see Bitcoin as Bitcoin, but also much more than that, about the whole idea of digital cryptocurrencies in more or less replacing or coming alongside the current monetary system we have. And that's why it's very important to look first at the monetary system as we have it now. And I will end my part to say something positive about Bitcoin, because there is something positive to say about Bitcoin. There are actually 3 positive things to say about Bitcoin. I will talk about that later. I'm trying, and I will probably succeed, in not talking further than 11:30, and maybe sooner. Because I would like, in the last part, that we discuss what you guys, and lads, are thinking about a new dispensation of digital, possibly cryptographic money. And for that, I would like you to think, if you think already about it, what you would like to discuss further on. It's about everyday use, and everyday users. And a key word you may use with that is cash. Think cash in terms of anonymous banknotes, anonymous money. Okay? Right. Do you agree? If we go back to money, and again, I'm speaking as well, I think that's really, really important. That when we look at phenomena like Bitcoin, we look at everyday use, at everyday people, at the large majority, the population in general using money. Now, I hope I'm not saying something new to you when I reiterate the 3 basic purposes of money. Money is, now I said that good in my head. Money is a medium of exchange. It's a medium of exchange. It's an accounting tool. It's a way of taking count of things. And it's a storage, it's used as storage of value. What does that mean? In its everyday use as a medium of exchange, it simply means that, for instance, you get a salary, it's expressed in terms of money. With that money, you can do all kinds of things. And you can all kind of things, all kind of goods, all kind of services are somehow equalized by using money. And you get your salary, and with that you can go to supermarket, you can buy stuff, you can buy a train ticket, or you can hire someone to do something for you, etc., etc. And you can, this is about fairly, say, small amount of money. You can also use that money for bigger things like buying a house. And then you get into, you actually get into finance. When as the amounts grow larger, money slowly changes of character. And that's something very important because aside from money, or besides money, we have the whole, as we know it, every day and for everyday use, we have the whole world of finance. And finance is not money. Finance is separate from money, but it maintains with money a very perverse relationship in the sense that finance is expressed in money. I will come to that later. As a unit of account, money is extremely practical. Again, having equalized things, services, goods, etc., you use it to as a medium of information. Say you are running a hospital. You are not going to itemize everything that the hospital does. At the end of the month, you simply see what money comes in, how much comes in, how much goes out, and that gives you the necessary information then to go into the details and see what has gone good, what has gone wrong, and things like that. That for that money, as a unit of account, is extremely valuable, and it's also exactly the same in your household book. It's exactly the same in all kinds of circumstances. Money is a unit of account. Don't forget, we are going to look later on how Bitcoin relates to these roles of money. And the final role of money is a storage of value, meaning that when you have money and you don't want to spend it immediately, you can set it aside with the kind of guarantee, general guarantee, if things go right, that next day it will still be there. And in a month it will still be there. And actually in a year it will still be more or less there. Maybe it's even got a little bit more if you get interest, and the inflation has not destroyed your interest, but okay. All these things are related to money in everyday use, in the use of the people in general. Now, what has happened is that we have a financial system which is basically fucked up. And this fucked up thing of the financial system is, among other things, what gave rise to the whole Bitcoin idea. In the sense that people got very, very disillusioned, very, very frustrated by the way money is working, as is this influenced by the financial system, and will try for something else. Why is the financial system basically so much fucked up? Because money, contrary to what many people think, money is no longer in hands of the state. Money has been privatized. Money has been privatized in the sense that now it's no longer the governments and the state, but banks that create money and have, in practice, what is called the seigneurage of money. They are the ones who create money. They are the ones who are allowed to put money into circulation. But that didn't come by accident. It came because in the democratic setup as we have, by the 70s, by the 70s, 80s, there was this idea that democratically elected government and democratically elected politicians had the tendency to throw the money out of the window. And that was not very good for the economy. So the idea was that the market would be much better at regulating money. And that the government would have to, if they wanted money, they would have to loan it from private banks. So you got the situation that governments had to go to private banks to borrow money they needed for government. And that money was allowed by the central bank. The central bank was made independent, and the central bank was made so-called neutral, in the sense that it would serve the purpose of the economy. But which purpose of the economy? The purpose of the capitalist economy, of course. So what actually you had was, theoretically, along the party lines, a neutral, objective way of handling money. But in fact, you had a political choice for a very specific economic system, which we call capitalism. Okay. When we go to Bitcoin, I think we can go to Bitcoin, yeah, given the time. When we go to Bitcoin, we see that Bitcoin is part of the idea that, well, the system is fucked up. By the way, the system as we know it, the financial system as we know it, is going to collapse. It's not a question of if, it's a question of when. But like many things, we don't know when it's going to happen. So the current policies of government, which is termed to be realistic and is in a certain sense within the current setting, is to do what former Greek minister Yanis Varoufakis has called to extend and to pretend. We extend the system as it is and we pretend that actually it's quite all right because look. And there comes something very important about money, that it is based on trust. Now many people think that trust is a trust that you have in the money. In fact, what you could say is a trust that money has in you. Because when you, suppose you say, I don't believe in money. So you pull out a 1,000 or 100 krona note, and you go to the supermarket and say, I don't believe in that money. Yeah. They look at you like, well, please pay your shopping and here's a change and please walk out. The system continues to go because, not so much because we are all believing that it is okay. It continues because if we were not believing it was okay, we would suffer as individuals, not so much the system itself. At the macro level, exactly the same happens. Governments say, okay, but we keep going. We keep going because we have no other, well, they have another choice. But that would be to overhaul completely the system. And overhauling the system is what people think or people believe when they start other kind of money. Now from this other kind of money you have two types. And that's important to make the distinction when you talk about Bitcoin, for instance. You have alternative currencies and you have complementary currencies. Alternative currencies are designed to replace, and I'm thankful to manuals that are not personalizing anymore in terms of that money wants to. No, Bitcoin does not want to replace the US dollar, but it is designed actually to do so. So you have the types of currencies that are designed, or having their design, at least the potential to replace existing monies. Complementary currencies, which we know as usually as local currencies, are happy to exist alongside the real. I don't know how many quotation marks you have to put along real money as we have it now. And that's something very funny happens, and it is that complementary currencies have actually the potential in their circle to replace the real currency. Whereas alternative currencies, which are designed to do so, usually end up as complementary currencies. And that's exactly what Bitcoin is at the moment. Okay, now there are many things to say about how Bitcoin and cryptocurrencies in general, but Bitcoin is the one currency. So I will take it past pro toto. Bitcoin is the name of the game. But there are many more of this type of currency, but Bitcoin is at the moment the name of the game. And it's one of the things I will say later about the good things of Bitcoin. Bitcoin is very flawed in its economic monetary design, and it's completely riddled with contradictions. There are many contradictions that I'm not going to list them all. One of the most important contradictions is that Bitcoin is intended as a means of payment. But since the supply of Bitcoin has been designed to be very limited, it ends up as something you hoard. Because as the saying goes, that Bitcoins are getting to be worth more and more as time goes by, if you start spending them, you're a sucker. So you end up with a currency you cannot spend, in the sense that you have not very much incentive to spend. So how this works as a payment system is difficult to envisage. The volatility of Bitcoin, and one big thing about Bitcoin, by the way, is that while being designed as an alternative currency, it's constantly referred to as towards the real quote, 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 unquote, 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 unquote currency. So actually what this guy does, he's not transferring Bitcoins, he's transferring €100 worth of Bitcoins. So apparently you can run Bitcoins without euros, but in practice you're not going to do that. Now the volatility of call it the exchange rate of Bitcoins towards euro makes it totally not usable as a unit of account. Because later on in the documentary, you have students who have just been gifted Bitcoin by either him or one of his followers. They pay with Bitcoin at a bar where beer is sold in Bitcoins. And they all hold their mobile, and they see the the price of their beer fluctuates in Bitcoin. Fluctuates a little bit, but it fluctuates. I mean, beer is 99, and it stays 99, and tomorrow it will be 99, but in Bitcoins it's 97.8, and then it's 99.3, and so big fun if you are buying beer. But if you are doing serious business, and then I quote Yanis Varoufakis again, Bitcoin is nice, but it's totally unsuitable to run a modern industrial or post-industrial, for that matter, economy. Another big contradiction within Bitcoin is that in the design of Bitcoin, and as I understood the early literature of Bitcoin, and maybe also the later literature of Bitcoin, it's for the small guy. The small guy is victim of the financial system. He's being robbed by the banks. I mean, you all know Max Kaiser, I hope? Max Kaiser is such a fantastic proponent of Bitcoin. But the Bitcoin is going to win with Bitcoin. The small guy is going to win with Bitcoin. Well, yes, but how do you get Bitcoin? You mine them. I'm not going to explain how you mine Bitcoin. These guys can. But the idea of Bitcoin is that with your computer, you generate Bitcoin by solving mathematical problems. Correct?
Yep.
Okay. Your laptop? Yeah, that was in the beginning. Now you have mining, Bitcoin mines. There are holes something like a kilometer long with rows and rows and rows of servers. The small guy is really out of the equation here. What you get is that a number of people, a very limited number of people, is amassing a large number of Bitcoins. And I'm not talking about the people who amassed a large number of Bitcoins in the very beginning, where you paid 10,000 Bitcoins, where the first exchange, real transaction with Bitcoin in the real world was buying a pizza for 10,000 Bitcoins. 2 pizzas. Okay, oh, I'm sorry. 5,000. I'm a bloody liar. 2 pizzas, 10,000. Well, you do the math about how much a pizza is worth now.
4 million.
He has gone. Since it's all nonsense, can't separate anymore. Oh, he's back. Okay. One more contradiction of Bitcoin. Well, it's exactly that. And we'll very little time to talk about the political economy. So I switch to that immediately. We make the joke that Bitcoin is a religion, and actually it has a Jesus. And it surely has believers. And the near thing that comes to the deity in the Bitcoin system is, of course, the blockchain. I won't talk very much about the blockchain. But the blockchain is presented as the technology which makes Bitcoin really worthwhile. The innovation in Bitcoin is the blockchain. And the blockchain, again, is that tool that equalizes, makes possible complete distribution of all data, and everybody is into it. Well, people can explain you better than I can that if everybody is really everybody, this is going to cost a lot of electricity to have all transactions being verified all the time. That brings us to another contradiction of Bitcoin, is that whereas it's supposed to be distributed and everybody is doing it, and there is no mediation, nobody stands between you and me doing the transaction. In practice, you see exchanges, and almost all transactions in Bitcoins actually pass through an intermediary. So again, the non-intermediary character of Bitcoin in practice is not there. With the blockchain technology, which definitely has its potential and its value, another contradiction occurs. Whereas the blockchain technology is supposed to be in the service of everybody, in practice, the blockchain technology is now being embraced by banks, the very institution Bitcoin wanted to do away with, to do their internal accounting and save a lot of money in the process. It's a difference between closed blockchains and open blockchains, and they are very different because they run along completely different circumstances and parameters. I will not go too much into that, but the only thing is that in practice, what was supposed to be one thing becomes something completely different. Almost its opposite, or exactly its opposite. But this is really problematic. Because the idea that blockchain is going to be the technology of the future might be true. I'm not so sure about it. But whether it's a good development or not, there I'm really entirely unsure about. Time to go to the thing which I was saying that it's kind of a joke that Bitcoin is a religion, because there are some true believers, and he's surely one of them. Because he has political ideas behind it. But more generally, people are somewhat more serious about that. And in that, then there is a big problem, because the Bitcoin represents a politics. And it represents libertarianism, or libertarism, sorry. Bitcoin is a typical anarcho-libertarian, anarcho-capitalist, and techno-libertarian project. The anarcho part is the idea that you do away with the state, and that the state is the enemy. The problem, in my view, is that the state does not longer exist as it is portrayed by the enemies of the state, the libertarians. And I'm very surprised by the fact that I never hear libertarians talking, well, never, it's not entirely true, but they say very little about corporates. They say very little about the holders of the economic power of the moment, which are no longer governments, but are financial institutions and corporates, big corporates. You hear them about the small guy doing away with the intermediate and doing this, but in practice it doesn't work like that. So this obsession with the state, which is typical of libertarian, is actually, in my view, is very backward. Is very reactionary. The whole project, in its technology, is elitist and unequalitarian. Because a big problem with the digital in general and the cryptographic in even more is that you cannot simplify crypto infinitely. In order to make it available to everybody, again, you will have to go through intermediation. And then you have to choose your intermediate. Which is going to be your intermediate? Something you have some kind of democratic control over, how little it is, or something that is purely corporate and operates with the magic of the market. So the anarchist part of Bitcoin, the anarchist part in anarcho-capitalism and anarcho-libertarism is about this, what I think is a backward idea, a backward struggle against a no longer existing state as such, because the enemy has now gone somewhere else. The libertarian part is deeply inequalitarian. Very often in its ideology itself, and in any way in its consequences. And then the technological part is also something that is excluding rather than including. And when it includes, it again does not include in a horizontal way, it includes in a hierarchical way. The people who are willing to it and the people who merely use it, by the way, are very often happy to just use it. And that's one of the general problem of the digital, whereas the whole IT actually is not completely developed. People tend to think, oh, it's a service like the telephone. I'm not going, or like a car. I'm not going to look under the hood what's happening. And that's very bad, but it's like that. The three good things about Bitcoin, to finish. I've not said everything I should say, but okay. Here we go. Bitcoin exists really in the real world as an economic activity. It's a niche, but it does give employ to, I think, a few hundred people, maybe a few thousand. There are Bitcoin ventures which actually are running, they're making money. They are doing things with Bitcoin and for Bitcoin and with actually existing customers who are actually paying money, etc., etc. So, you cannot say, Bitcoin doesn't exist. It does. The second thing is that Bitcoin has a use. It has a use in some circumstances, very specific circumstances, and within these circumstances, again, for very few people who are in the know of the Bitcoin adventure. And the best example of this circumstance is when you are in a situation that foreign international transactions are complicated, impossible, or very expensive. The two examples at the moment are Argentina and Greece. They've been documented. In both countries, you have capital controls of sorts. They are a bit different. In Greece, you have capital control based on euros, enforced by the European Central Bank and the institutions formerly known as the Troika or the TIFCAT. If you are in Greece, you can pay for your internet, for your domain name. To give an example, or you can. A lot of things you can pay you can transfer money to a foreign country. If in Argentina you can transfer money from a foreign country, but it takes a very long time and it's expensive. You can receive money from a foreign country, it takes a long time and it will cost you a lot of money because there is a black market rate for the peso and there is an official rate for the peso. So on both sides of the transaction, you want to avoid going through the official mainstream channel. That's the moment that you approach a Bitcoin exchange, a Bitcoin exchanger, and you do a quick transaction. You purchase Bitcoins, you send these Bitcoins, the receiver receives Bitcoins, immediately re-exchanges Bitcoins in the local currency, say dollar, euro, whatever, and everybody is happy. And same other way, you want to send money to Argentina, but you want that the receiver gets a fair amount of money, you do it with Bitcoins. So there is an actual very limited, very circumstantial, practical use of Bitcoin. Again, prove that Bitcoin is not a complete fantasy. But finally, last but not least, the major good thing about Bitcoin is that really kick-started discussion about money and about different ways of organizing money, and something that is really, really needed because, as I believe and just said, the financial system as we know it is going to crash, and it will take the money as we know it with it. When? It's not if, it's when. When? Nobody knows. I think I've said it, and yeah, I'm more or less in time. We have 10 more minutes and so what I throw in the discussion is, how do you see the future of money? How do you see especially the future of money as digital and probably as encrypted? And in that terms, think about cash as we know it, with the characteristic that cash is an anonymous form of payment and is also the only legal tender, as opposed to money you have in the bank, which is not anonymous because all transactions are registered and is not legal tender and can be taken away from you anytime. Right. You're nice guys, but you clap before your time because you have to clap for yourself afterwards. Yes? Who was first? Well, give the ladies first.
thank you for this great presentation. I think one of the key questions is how we measure value and how we exchange those values, like what I understand. And you can use different standards to measure value. Like money, it's kind of an agreed upon standard that we use to balance, like to evaluate something. But there are other ways, like you were talking about complementary currency, like time banking, for example. The question is like, what token or what standard do we want to use to measure value so that it's fair? Because you can say like time, for example, is in 1 hour you can do much more and I can do much less. So is it a good tool to measure or what I see, the potential I see in blockchain technologies, maybe beyond like Bitcoin. I'm not a big fan of Bitcoin, but I think the blockchain technology can enable us to craft and design that kind of exchange tools. And I just give an example, but for example, you could have, and there are some experimentation that you introduce a reputation weight in a system, which through the blockchain technology, a community can evaluate and can dilute the reputation around values that we share. We can evaluate a contribution within a project, within a community, a peer review, and we can agree of what is this value, the value of this contribution. And we can, through this blockchain, like have a kind of internal currency that we can use to reward contributors in the system and so on. So that's actually, and then you can imagine, of course, to have trading platforms to exchange those different currencies. And I'm thinking especially about backfeeds. Maybe you heard about this project, backfeed. They're building a protocol based on Ethereum where a community can create this currency. Well, it's so that's the potential that I see behind it.
Actually, everything you said, I can agree with, and everything you said is actually, if it was a question, is also an answer to it, because you use the keywords community, platforms, organizing, peer-to-peer, etc., etc. Now, go out of this room, go in the street, take a tram, and ask the people around you, community, takes a value? No. They believe in what's in their pocketbook. And that was the situation we have now, and what I'm very interested in how we reconcile the two things. Because it's absolutely obvious that if we want a different world is possible, but we will have to organize it. And then we have to be very serious about the reality content of what we want to organize, or choose to have our own communities and deal within our own communities. But for society at large, at the moment, what you are saying is a bit abstract. Okay? You want to say something?
It's just, we'll make a follow-up question about based on what you said about anarcho-libertarianism and the other question here about Bitcoin people being against the state but not making any critique against the corporate organizations. And I wonder which way should we choose for the future? That should we try to reinstate the old state, or should we try to create these kind of communities that you are talking about now, and commons-based kind of common coins? There are different.
It will be more like that.
But can you repeat the question for the camera?
Oh, okay.
No, but one thing: how can the state and the commons work together? Maybe that could be.
I hope I repeat it well. Anarchists, anarcho-libertarians, anarcho-capitalists are against the state. Is the answer then, do we have to reinstate the state as it was? Or do we have to go to building communities? I think it's, maybe the best answer is to be a hybrid. Because take the good things of the state. Don't throw the baby out with the bathwater. One of the important principles which is very much attacked in the current ideology of innovation at all, disruption, and doing everything new, is to completely forget the principle of You will get your turn. It's completely forget the principle of if it ain't broke, don't fix it. And the system at the moment is broke. The state is broke. You have to fix it. But you have to fix those parts that don't work. You have not to throw the whole thing. You have not to throw that. And that's a question of trust. That famous trust, which when you have a small community, you can have trust. When you have a very large community, the way we do it is not going to work. It's not going to work very well. And I was thinking that we have, in the West, we think about two forms of trust. What you might call human trust in the sense of legal trust, contract enforced trust. If you don't respect the contract, you will be punished. It has a bad consequence that basically everybody is guilty till proven innocent. Because you have always this threat of legal procedures above you. The other is that the techno-libertarian response is algorithmic trust. The algorithm is going to replace human, will always fail anyway, and can be trusted by something which is real. There's a third way, and it's very common in Asia. It's a social trust. The punishment for the individual not to become untrustful is not so much legal threat, is to be excluded from the community, is to lose reputation. Reputational trust is there, what you could say the basis of the currency of things. I would think that you will need something like a higher authority, but with very limited remit, or with a limited remit. And organize as much as possible at the local level and the community level.
Sounds very much like anarcho-syndicalism then.
Yeah, but in principle, and especially in Europe, anarchism is considered something of the left.
Yeah.
In California, in California, it's considered something of the right, quite often. So yes, you're right. That's. And Manuel is going to.
Yeah, I just had a comment about this anarcho-capitalism, that they are against the state. You kind of got into it that in Europe it's anarcho-communism that is the leading.
Anarcho-syndicalism.
I think it's more useful just to talk about anarchism because the extreme right and the extreme left have very much in common, and I think the battle is not between corporations or state. I think it's because we still want to have some kind of organizational form, some authority. So I think that the battle is between centralized power and distributed power. And I think that's the core idea of the libertarians as well. They hate the big banks because they're in bed with government. There's too much power in too few hands. I think that's the fundamental idea.
Yeah, the thing is that in my opinion, the distributed setup stops somewhere. You cannot distribute ad infinitum. There is some. So, if I'm not wrong, you have this famous scheme that you have centralized, you have decentralized, and you have distributed. I tend to think that in the hybrid way, that decentralized is probably the way to go. Distributed goes too far. It's not sustainable unless you do it only community-wise. Is anyone known here with a book which is called Bolo Bolo? You are. Okay. Oh no, you are not. Oh no, I thought you were. Okay. Nobody has heard about temporary autonomous zones? That's not very much. Yeah. Okay. That's not. I'm surprised because even in geeky circles, it's a popular book. Well, then I will stop here because that makes no sense to talk about something you don't know about. The comparison is going to go wrong. Back. Oh, yeah. Okay. Back to the. Can we try to put it on the digital currency, cryptocurrencies, use of cash, etc.? Yeah. Sorry, you have also. You will also.
I've been researching serverless peer-to-peer since 1997 as my full-time profession.
Good.
And one thing you learn very quickly when you research algorithms is you cannot broadcast information over the whole network. And the blockchain does exactly that. And that's, in my business, considered a beginner's error. It means the blockchain does not scale to many users. When you have too many nodes, it becomes too chatty and too much bandwidth. And currently, what I hear from those running Bitcoin servers, they have to have really, really fast connections and really, really big computers. You can no longer run your own Bitcoin node at home because it's a costly bandwidth. And we knew that. We researched peer-to-peer systems. So the blockchain itself is very, very flawed. I learned after about 1.5 years of research that that's a bad thing. So that's really a beginner's mistake. But we have an option. There's another system that could do the same things, or similar things, but in a better way. And that system already exists since 1,000 years. It's one of the two kinds of Arabic bankings. It's done manually since it has been done for generations. They can transfer money across the globe between each other from Sweden to Sudan or anywhere. And do it with trust in many steps. And we could automate that and make it in a peer-to-peer system. The transactions would happen in seconds instead of now, as it takes a week down to Yemen or Sudan. And that way we can transfer money very cheaply, very quickly, out of control of anyone else. It's only those we trust that are involved and what they trust. So there is an alternative system that someone needs to code up and build and start using.
I think it was what I was saying, the social trust model.
Yeah, but this involves you just need to trust the next guy.
Yeah,
you
just
trust the world.
No, that's true. But don't forget that the next guy and the next guy and the next guy and the next guy, they're all parts of a whole. That if one of them fucks up, that one is immediately taken out.
No, this system works even if some of them are evil. The current system that the Arabs use works even if some of them try to trick the system. So that system already has all the solutions, and we can computerize that. So they already tried this for over 1,000 years, but we know how to do it. We just need to code it up. So I won't go into all the details now because it takes like 20 minutes to explain, but if anyone wants to know, I can explain afterwards. So it's an alternative. So this system can not really store money, it can just transfer money. It can transfer, I can pay in Swedish crowns and the guy over there gets whatever local money they have. So it's not a new kind of money, it's just a very efficient way to transfer money.
Well, you have a company called TransferWise, which is doing exactly that, as I understand it.
Yes.
It's called TransferWise.
But that's one company.
Yeah.
It's not distributed.
No.
It was distributed.
No, but I mean the system of fast and non interference transfer does exist. Yeah.
I think we're going to take a break now before the next speaker.
Yeah.
The next speaker is starting at 12, so we have 11 minutes break.